So what is absorption? That's probably a new term. You may haven't heard that used in the market. I define it here. It's a scenario where we see a disproportionate amount of volume near the extreme of a bar with little to no price movement beyond that level. So that probably makes sense, but it'll make more sense once you see a graphic. And the footprint is excellent. It's showing you this, and it's really this is something that I actually, in our Chicago trading workshop this past summer, I did a whole session on this, and I went into pretty great detail. But I'm going to keep it pretty simple here. And what I really want you to just see is absorption. This was an up bar, and what we're looking for is the high volume level in the top third of the bar. That's what you could say top quarter, top half. Top third is kind of what I settled in, but I like to see a lot of volume in the top part of the bar with little or no follow through, and I like to see it with positive delta, because what that tells me is the aggressive buyers, they're buying it aggressively into higher and higher prices, and then it stalls out. And what absorption is the other side. The passive seller is absorbing the buying. So there's all the traders chasing price up to a point where all of a sudden it just kind of runs into a wall. I'm sure there's some great analogies for this, but just think of it where you're going, it's moving quickly, and then all of a sudden it stops moving, but there's still a lot of volume trading. What you see is the market is swelling in volume, seeing a lot of trade, but you're not seeing price move. And so the market's reached a point where the sellers, the passive sellers, are very content providing supply into the market to those aggressive buyers, and they essentially absorb the demand. Well, once the buyers run out of demand, the market will roll back or rotate back a lot of times. It's just supply and demand. That's economics 101. But the nice thing is here we're applying this on a footprint chart and on an intraday footprint that allows you to trade off this information in a way that you've never really seen. You've never really been able to see this information. Here's the opposite on a downtrend, and I'll show you some real market examples from I'll show you some examples of this. By the way, what you have, these graphics that I'm showing you, this is the footprint profile. So it's obviously you're not seeing numbers, you're seeing a graphical representation of volume and order flow within a footprint bar. So the wider the bar, the more volume, and obviously the shorter the bar, the less volume. So this was one where we had a lot of the volume in the lower third of the bar, and notice it's all aggressive selling. So they're just jamming it. They're just selling. Boom, 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 hitting the bids, and no follow through beyond that. Of course, I don't have future bars, but this bar was the idea here. This was taken because it was being absorbed. The buyers, the passive buyers now were absorbing the aggressive selling. So let's move on to some examples. This was today. Yeah, this was today. This is the S&P E-mini today, and I've got looks like I've got 2 3s. So this was 0.1. This was supposed to be 0.2. This was 0.3, and this was 0.4. Okay, so let's look at 0.1. And 0.1 is referencing this bar right here. Look at this. This looks just like the bars I just showed you guys. This is obviously a down bar, and what do you see? You're seeing a swelling of volume in the lower portion of the bar. The market's absorbing the selling. Look at the volume. Look how much volume traded here. This is where the footprint bar statistics is it's really nice to have on here. So almost 22,000 traded on this bar. Look at it compared to the other bars. And by the way, this is a 5-minute bar, so I like looking at the footprint bar statistics on time-based bars because every bar is the same amount of time, so everything is kind of standardized or equalized. That's a little tip, little trick. It's not so much a trick, it's just that I like the footprint bar statistics on time-based bars. And so this thing trades down, notice a large delta, and so what I'm witnessing is absorption, but then right here, this is supposed to be number 2. But look at the, see this delta change? 5,668, big number. And there's nothing like that on the chart, at least in a buy. So what we're seeing here is a big flip from selling to buying with absorption. So I know there's shorts caught. They're caught short down here. That's what this tells me. And what happens when shorts are caught? You don't type it in, but you know what happens. They have to get out, chase it the other way. And Anthony says this in the room. I mean, this is a classic trade. He'll call out all the time. And here we go again, other direction. Chase it. Let's chase it. This is 84, so it's a 10 handle move. And now look at the bar. We got absorption taking place. It's sell. The aggressive buyers are being absorbed by the passive sellers. And look down here. We get number 4. This is our delta change. I don't want to make too, I mean, the delta change, I like it. I don't want you to think it's the holy grail, but when you're looking for switches or turns in the market, you're going to find that it's very helpful. I'll just leave it at that. And you'll get a feel for your market and time frame, kind of what is big and what isn't. But this shape of the bar, this is, remember, the footprint profile, coupled with this is a nice, really nice pattern. And you might choose not to look at it this way. To me, absorption's easier to see when it's the shape. It's easier to spot. But let's look at another example. This is it on a traditional imbalance footprint. You can't see the shape, obviously. You see the numbers, right? You get to see the numbers. And what we got here is big selling. This is that aggressive selling into the bid with no follow through. So they're absorbing these bottom two price. This was natural gas, and this was not a shot from the last day or two. This was from another presentation I did, but this was a great example of absorption literally in the bottom 2 ticks. Just the passive buyers absorbing, just saying, hey guy, give me all you want, sell it to me, because and for all you know, this is just a big iceberg order that's absorbing it, and you're bound to see a snap back from that level. All right, I think I got one more screenshot. Yep. So this is gold, and this was from, actually this is daily. This is a daily chart of gold. This was from mid-December. Just actually this is a little bit older. So anyway, point here is what you see. These are daily. So this goes to show this pattern will work on a much larger time frame than your intraday. So you can look at this on a daily time frame. But what I boxed in right here, major absorption, heavy selling into the hands of willing buyers. And look at the delta change down here. Hopefully, I know it's really small on your screen. The delta change where my cursor is about 7,500, which is huge. There's nothing like that on here. And so that's what we want to see. So this trade, obviously, daily time frame traders, you have to give it some time to play out. So it played around at the level. Notice it came back and tested here a couple times before it surged to the upside, and this was a big move, $100 move in gold, with hardly no heat really. It tested it, and that makes you sweat, but other than that, it was a nice move higher.